This Spotlight on Annuities is sponsored by Tucker Advisory Group, teaching both clients and financial advisors powerful safe money strategies. For more information, please visit tuckeradvisorygroup.com. Low interest rates and new regulations will likely cause some insurers to reevaluate and in some cases halt their fixed annuity operations, according to experts' projections. Amendments to the National Association of Insurance Commissioners' Annuity Suitability Model Rule require insurers to establish a system to oversee annuity recommendations and ensure all annuity transactions are suitable for customers. The strict requirements and low interest rates are decreasing profitability within the fixed annuity industry. Transamerica Corporation announced on October 6th that it will stop sales of fixed annuities through insurance brokers in 2011. The insurer said the, quote, persistently low interest rate environment and increasing regulatory challenges influenced the decision. Insurance broker fixed annuity sales accounted for approximately 40% of the industry's sales in the second quarter. Other insurers made similar announcements over the past year. Dearborn National in July announced the company's intention to leave the fixed annuity market in all channels. Last year, Aviva USA slowed fixed annuity sales. Second quarter fixed annuity sales rose 18% from first quarter to $19.4 billion, but were down 30% compared to second quarter last year. And now for Carlin Tucker with something you did not know.
Thanks, Paul. Hey, I've got great news. Annuities are becoming more mainstream, and it's about time, isn't it? Wall Street is finally embracing annuities like never before. They have to, right? I mean, their ideas and strategies have failed tremendously since December or October of 2007 in the current recession. We call it the Great Recession because it's the greatest thing that's happened since the Depression in terms of its size. But they're more mainstream. Today I Googled the word annuities and I went to Annuity News under Google and I found positive ads about ING and Aviva and American Equity and Allianz and Jackson National and good news about it. And you go to other news and you find that companies are saying, here's the questions you should ask when you buy an annuity instead of saying don't buy one. The country of Chile is embracing annuities, and every retiree there is required to put all their retirement savings into annuities when they retire, and then they get a guaranteed income stream, no fluctuation from the stock market. This is good news.
Thanks, Carlin, for that update on the industry. The National Association of Insurance Commissioners, or NAIC, Life Insurance and Annuities Committee recently formed a working group to develop a model bulletin addressing stranger-originated annuity transactions, or STOAs. The NAIC created the working group during its fall meeting to address concern about STOAs and is seeking industry input for the model bulletin. The NAIC hopes the bulletin will encourage insurers to identify STOA fraud, which has become an industry concern. STOAs occur between an agent and/or investors and an individual, often in ill health, who is given a fee for being an annuitant. The STOA transaction includes a death benefit, and a trust will often be named as beneficiary to protect the names of the persons who bought the STOA. Insurers are concerned the practice will increase death benefit payouts, thereby increasing premiums for consumers. The recent recession has led many younger baby boomers to begin thinking about retirement and seek guaranteed retirement income, according to a recent study by Allianz Life Insurance Company of America. Nearly 84% of respondents said the safety of their money was more important to them than it was several years ago. Factors contributing to the shift include a shortage of defined benefit programs, several years without cost of living increases for recipients of Social Security, and recent volatility in the stock market. According to Katie Libb, Vice President of Consumer Marketing and Solutions for Allianz, a growing number of younger Americans are considering annuities as part of their investment portfolios. The study notes that this trend offers opportunities for advisors who reach out to those in their mid to late 40s. Just 19% of respondents said they currently work with a financial professional, yet 41% of that group said they were interested in hiring one. 22% said they felt overwhelmed at the prospect of providing for themselves and their family in retirement. 29% of those surveyed said they understand that working with a financial professional could help them deal with the threat of outliving their retirement assets. Meanwhile, 41% of younger boomers said they had not researched annuities within the last 10 years. Of those who currently held annuities, approximately 7% said they believe they have a good understanding of the products. 80% of younger boomers who owned annuities said they were happy with their purchase, while respondents in this age group ranked annuities highest in satisfaction among a range of other financial products. Finally, 97% of respondents in their late 40s said they believe there is a current retirement crisis in the U.S. For more industry spotlights, visit producersweb.com.